What's up, everyone? I'm back again, and today we're going to have a very serious conversation. And this is a topic about finance, how to seriously screw up your finance. And these are 8 ways I've seen people screw up their finances, and this is throughout the years of studies and research I've been doing. So, hey, stay tuned and see what it's all about. So, finance is one of those topics that not much is talked about on a day-to-day life, and these are topics that are really hard for people because they don't want to talk about their money because the lack of money, the issue that comes with it, the arguments, whatever it is. But every single week I talk to a lot of people about money, finding variety of ways they screw up, and I came down to say, you know what were the most common 8? So one of the most common 8 is not thinking about your future. A lot of people refuse to talk about their future, about why they need money, what they need money for, if they want to buy a house or anything. They don't want to talk about it. They refuse to talk about. And a lot of financial situation, it is preventable. So a lot of these bad financial situation that people put themselves in, they are preventable. And you have to start studying and learning about finance and prepare for the future. You can't do anything if you don't prepare for the future. Now, what are you going to do and how you're going to do it is you have to get with yourself a good game plan. What is your 5-year goal? What is your 1-year goal? What is your 10-year goal? These are all situations you have to think about it for yourself because goals are goals, and as long as you have a goal and going towards it, even if you don't hit your goal, you still got farther along than just sitting there and doing nothing. Now, number 2 is not having a emergency fund. I can't talk about it enough about having emergency fund. Now, I really don't like the whole Dave Ramsey $1,000. It's just that's not enough for me. I say you need 3 to 6 months, counting on how secure your job is. If you have 3 or 6 months of your expenses, you should be good for almost any accident. You don't have to tap into your credit cards. You don't have to tap into nothing. You'd be pretty secure. Now, number 3 is buying more house than you can afford. The rule of thumb is if you go up to like 50-60% of your rate of how much you are making a month or your annual income or monthly income, you are in too much of a house. The good rule of thumb is not buying a house with more than 1/3 of your income for your monthly costs. Now, why is that important? Because if you have too much house, you are not going to be able to afford it. You are going to get yourself in a rut. What I have noticed is that people that have their mortgage at 40 or 50% of their take home pay, they end up falling behind. They barely make ends meet, and it's just not worth it. And the people who did it smartly with 1/3 of their income, they had wiggle room for situations like a tax increase. Because whenever you purchase the house, does not mean that's your final cost of the house. Every year, your property tax goes up, and that factor in, or your insurance will go up. So you have to factor that in. You have to give yourself wiggle room because if you're at 50%, you are not going to be able to afford it because you're at 50%. And by the second year, you might be at 60-75% of your income. You might be at 60-70% of your income. And it's really just not worth it. Because if you are at 60 or 70% of your income, what's going to happen? You're going to get yourself in a bad situation, and it's just going to put yourself in a worse situation, and you're not going to be able to afford it. Now, if you're at 30%, what's going to happen is you're going to be able to afford it if it has an increase or some repairs needs to be done. The whole issue is if you don't have that wiggle room, what are you going to do? There's pretty much nothing you can do. Now, next part, or the other issue I've seen, or the fourth, is taking out payday loans. Those are the worst loans you can get. Don't ever get a payday loan. Payday loan, they don't have a cap. They can charge you 75% interest, 85% interest on your money. And it is not worth it. I've seen people take out these crazy payday loans, $200, $300. For what? Nothing. They get nothing accomplished by it. They get farther and farther behind because they pay so much in interest payments. And it's worse than a credit card. So why would you get yourself in that horrible situation where you're paying 60-70% interest rate on a payday loan? These are loan sharks. It's not worth it. I know it might be your last chance or last place you can get money, but I wouldn't ever take it out there. All right. The fifth one is spending more money than you make. You don't understand. How are you spending more money than you make? You shouldn't be spending more money than you make unless you put yourself in a situation or you're not making enough money. So I understand there's unforeseen bills and everything else like that, but that means if you are spending more than what you make a month, you are living above your means. It's either your housing cost is too high, you're in an area that you can't afford. You might have to move to another area. And the solution to this is you have to budget. Tighten your budget if you have to. Make budget cuts. Anything you can do to get yourself under the correct budget amount. If you can track your budget, you'll find out you're spending a lot of money on useless things. And if you find that out, you are going to put yourself in a better situation. Now, you might find out that you are just slightly under budget and you don't actually need Netflix that month. You don't actually need Hulu. You can borrow, someone else's account for a little bit. Or you actually don't need Amazon Prime. You don't even use it that much because you don't buy anything. There's a lot of subscriptions that people pay for that they don't use. And when you do a budget, you find out all these things. So take the time, do a proper budget, and you'll find out, hey, maybe I shouldn't be spending so much money on these areas and I can afford a better house. I can afford to pay these bills and not go over budget. Or maybe whenever you do your grocery bills, you don't buy the expensive junk food because what costs most the money is junk food and snacks. Maybe you had to go more healthier option to save money, and these are all the things you have to do to figure out your ways to budget. And budget is on you. I can't help you on your budget unless you help yourself first. And using a credit card is the next one. Now, I'm not saying using a credit card is bad, but the problem is people don't understand credit cards are credit that they let you use for things you might need or use it for emergency. People use it every day as it's cash and they don't have the actual money. So you are borrowing money before you can even do anything. So why are you doing this? If you're going to take a credit card and use it wisely, because most Americans don't understand that credit cards will put you in a bigger debt and it'll give you a harder issue to deal with. So if you're going to do something, do it where you have a purpose with the credit card and don't spend it unwisely. Try to pay the credit card every month off. And if you can't, try your best to pay as much as you can so you don't pay the 32% interest rate, that 22% interest rate on that credit card. Because those fees are more money to the banks. They're making more money off these credit card fees than the stock market makes a year. I mean, if they're charging you 32% APR and you get a 14% return on the stock market, either way, you are losing money. So credit cards is not helping you invest your money. So use that time, pay off your debt. And lastly, taking out a home equity loan to pay off debt, home improvements, that is the 8 financial mistake that I've seen people do that ruins people. Even though the payment's $200-300 a month, they take out $200,000 to build something they do not need. Now, I made this mistake, but I had plans to try to pay it off early. And what happens to the plan? It went down south, and luckily I paid half of it off. But that is a poor mistake on my side. So don't jeopardize putting your house on jeopardy just because you want to do renovation, just because you want to pay off other credit cards. That's not a proper smart decision. What you want to do is use your home as an investment where you don't have to pay on it in the future and you have somewhere to live. Now, taxes might go up, but it's still cheaper than paying taxes and a mortgage, because a mortgage every month is going to go away in your retirement, and that means you can retire comfortably. You don't need to make as much money. All these financial decisions are completely in your control and over your own finance. So please listen to these advice. These are 8 biggest way I've seen people screw up their finances. And turning finances screw up into financial freedom is very easy. You just have to understand that financial freedom can come at you anytime. You can always fix your mistakes. That's why I love finance. It's never too late to fix your finance. And there's always different ways to fix your finance. So please stay tuned and like and subscribe to my video. Have a great day.